Right, so yes, thank you for coming to this weekly market analysis webinar from LCG. My name is Jasper Lawler. Yeah, a lot of interesting things happening in markets today. Big merger over in the US potentially happening between Sprint and T-Mobile, and obviously that's owned by the big German telecoms company. And over in the UK we've got Asda and Sainsbury's looking at a merger. So lots of M&A activity. Generally shows some confidence in the market, but I wouldn't exactly say the price action that we're seeing in the indices is all that confident, with probably the notable exception being the FTSE 100, because we've seen some distinct weakness in the pound, and so some really good trends actually happening in currencies. After a little choppiness for a few weeks, we're getting the dollars breaking out, and it's it's making the trading a lot more interesting on that front. So let's get right over to that. Let's have a look at those charts. So let's just quickly get to our daily chart. So I think the level that we've had on the chart for quite a while now is the 120.90, which if I zoom out a bit, that's basically this breakout level here, where we challenged it sort of 2-3 times over here, once here, and then finally got the breakout to the top side, hit 125, and we've rolled over again. So this is quite big support, and you notice that we bounced almost precisely off the 50% pullback of this rally from the low, and then just below there we have the 200-day moving average. So the 200-day sits in and around about 120.45 perhaps. 120.40 if you're being conservative. Right now we sit at 120 and then 120.90 being that that support level. So that 50 pip range is pretty solid support. Now we're running right into it at the moment. If we drop down to the 4-hour chart, I think that's where we can kind of determine whether this level's holding. So obviously we've got that initial bounce from that 50% retracement level. We put in a little high. We tried to push through it, failed. Put a bearish engulfing candlestick hit right after having touched the 20 period moving average on this 4-hour chart. Got a little nice pullback here, about 50% within that bearish engulfing candle. So if you were looking at that bearish engulfing, looking for a better entry point, got that 50% pullback this morning, and now we've rolled over and we're pushing down through this 120.90 level at the moment. So based on this price action, absolutely no evidence whatsoever of a reversal of this downtrend, but obviously we can see it's been going for quite a while now, and we have hit this significant support zone. So if you're buying within this 50 pip zone at this point, you don't really have any evidence yet that the market's ready to turn around, other than that initial bounce and the zone of support by itself. We haven't had that secondary confirmation yet. What you could wait for is we've got the A, and then we're in the B leg, and if you wait for a C leg to run up and break through this resistance here, then you've obviously got the higher high, a higher low, and then a higher high to confirm on the shorter term 4-hour basis that this longer term level is going to hold. So that's certainly an option. For the time being though, all the evidence points to the trend resuming, so we're just looking to see whether this support zone can hold. Earlier this morning was really the time to get in on this next leg lower, and obviously the first zone of support will be those closing levels in that low here at 120.50, targeting the downside. Should we take out that 50% retracement level, then you can see there's another little confluence of potential support down here. It's this low, it's this previous high. It's around 1950, which is a round number. It's obviously just below the 120 mark, and that is also that's the 61.8% fib of this rally, where we saw the 50 worked quite well. So it looks like the market is respecting these fib levels. So the next one down is the 61.8. So obviously, given the fact that we're around, what's the actual live price at the moment? 120.80. So if you're looking at 1950, you know, we're looking at sort of 130 pips more to the downside potentially from here if this little next down leg continues. Obviously that would require us taking out this 200-day moving average. Let's switch gears to sterling. Sterling looking a lot softer than the euro, so this is the 4-hour chart. Let's give that a little context through the daily chart. This is the range low, so obviously the background of it is that we completely failed to break out through the top side, got a little false break, have completely crashed since there, and now at the bottom of the range. So really hasn't had much chance for a breather. One little up day amongst 1, 2, 3, 4, 5, 6, 7, 8, 9 days down. So 1 out of 10 up days, pretty soft for sterling. Obviously been a great trend to ride lower on a short-term basis. But now we are hitting this pretty significant potential support. If this one gives way, then we do have this 200-day moving average, and similar to the euro, the kind of the peak, and then the little mini peak before the breakout down at I mean 136.17, not particularly specific, but what was this peak over here? I'll tell you what, I could do this, can't I? Market snapshot, and then you go over to this candle and you can see the high was 136.15, you could say. So yeah, about that. So that's if we take out this level, which it looks like we want to at the moment, 136.15 would be the next one down. And that's the 200-day moving average. And this market needs a little bounce at some point. We're in oversold territory on the RSI. Strictly speaking, a range-bound market with a rising 200-day moving average. We're expecting this market to bounce at some point, but it doesn't really look like it wants to at the moment. On a 4-hour basis, as you can see, absolutely no signs of a reversal to the top side. We had this little instance which we talked about, I think we talked about it last week, where we had the rebound sold off from the RSI, from the moving average, bounced off the low, but then came off the resistance again with a big sharp unwinding of the previous day's candle. And then eventually we took out these lows here and just had the next leg down quite dramatically. So looking at the same thing at the moment, another little kind of bearish engulfing pattern after this brief period of consolidation. So you're not really showing much sign of buying interest yet. Even if we were to take out this little level here, I'm not sure that in itself would be much proof, because we're still well below the moving averages. We probably need some more proper consolidation down here before we can be confident into buying into this market. At the moment, it just looks like it's heading lower. Maybe watch out for some pullbacks within this bearish candle. We haven't had much of one yet, but if we do get somewhere within there, then maybe that's an opportunity to expect the market to continue to roll over lower. And then obviously we'll have to reassess when we get down to this 200-day level. I would expect some sort of rebound there. Obviously got 136 as a round number just below it as well. Moving on to the yen. Nice little uptrend taking place in dollar yen. You can see that we've been pausing basically the 50% retracement of this down leg here. The 38% was kind of around this vicinity where we were pausing for a while. Broke up, pausing around the 50, and you can see that there's a bit of a confluence of potential resistance here with this 61.8% pullback and this low and this little rebound peak here, and again the 200-day moving average. So you can see, I mean, obviously there's a lot of similarities between what's taking place in all these markets. The sterling clearly got its own sense of weakness, but it's clearly a bit of a dollar breakout which is taking place at the moment, and with dollar's been weak for a while. So the 200-day moving average is down for the dollar. It's been up for the pound and the euro, so we're coming down to test those longer term support levels. I've got a question here about the 15-minute time frame. I mean, I don't get the chance to dig down around at the 15-minute time frame too much. But what I would say, and I hope that's why I hope this webinar is useful for those who do trade on shorter time frames, is that I'm giving you kind of the broader picture here. So if you are trading in line with this 4-hour trend, which is to the top side at the moment in dollar yen, to the downside in cable, then it gives your 15-minute chart trades a lot more weight because they're trading with that longer term trend, if that makes sense. So moving on to the indices, starting off with the FTSE 100. So I would I would expect that this was a pretty massive level, basically 75600, but 7590 if we be a bit more specific about it. Has been a big level. We obviously broke above it, but then crashed right below it pretty quick. So coming up again from what has been a quite impressive rebound of late, maybe that would be an area to find some resistance. Not that you necessarily want to be selling this market. It's charging higher, it's above all the moving averages, but obviously these are quite volatile times in equity markets. You expect after such a strong trend it to go in for a bigger correction at some point. So would imagine that somewhere around this, what's also the 76.4% retracement you can see of this this corrective leg that we've had comes in at that area too. So that a potential area of resistance. So that being said, the trend is very much to the upside for the time being. We've had a little, we're well above the 20-period moving average on the 4-hour chart, but really any kind of upward movement after a little pause can be opportunities on a 4-hour chart. We're well above the 20-period moving average, so not exactly buying an area of value if you were to get in now. So you can obviously wait perhaps for a pullback down perhaps towards that that previous peak that we had down here, somewhere between this peak and this low. You'd expect the market to find some value again in what's been quite a nice uptrend, assuming that we dip down to here and rally up into this 7590 as a specific resistance. Obviously we've started to stumble a little bit below it, but we haven't actually tested the level yet. And then we'll if we do get up to that level or if we start to show some serious weakness before the level, then we'll start reassessing whether it makes sense to look for some sort of reversal to the downside. Looking perhaps for a trend line break, something akin to the below. Obviously look at maybe something a little bit longer term, since it has been quite a strong uptrend. Something like a break of this rising trend line would be supportive of the case that we've topped out and we're going in for a bigger correction. But we haven't quite got there yet. At the moment, probably still looking for upside opportunities until we get to that level, and then we'll see what happens from there. Similar in Germany 30, the level has been a lot more clear cut. So let me zoom out again to the daily chart. So obviously had the big correction in February, bounced back the next week, and that bounce back level has pretty much been where we stalled out once, 2, 3, and then going for a 4th time at the moment. With this many retests and the fact that we held the lows so well, I would be more inclined to think that we're about to break to the top side here. But certainly open to the idea that we don't on another occasion, and that might be supported by a break of this little short-term rising trend line here, and that would obviously involve probably dipping below this little low here and these moving averages. If you I don't put too much weight on that particularly as a swing low, because it's got such a long wick on it. So that's why I'm not inclined to draw the trend line like this exactly. This low involves cutting through that low there, but even this bit of a steep trend line, and this not really necessarily a important swing point. But obviously if we do take it to the downside, it adds weight to you know, something more like this. So this resistance holding at the moment, but you know, hoping for some sort of break to the top side of what I've got these targets on here. Let me remove one of those. Okay, how do we do that? Object list, no, viewing options, targets, remove that. So you know, this little area here, should we get a breakout to the top side? That's, you know, even on a 4-hourly basis, that might be enough for the market to get on board and show some serious upside potential after being capped by this level for ages. Where do we get to from beyond that? Well, another level that we've been pointing to for a while. I thought we might get to it earlier in one of these bounces, but we never quite did. It's just where the market was stalling out with these lows prior to the breakdown. Could be of some interest. So it's sort of the 12,850. If you're going to put a round number on it, somewhere around there, potentially where the market could head if we get a breakout to the top side. But if we get through there, then obviously all the way back up to these previous highs is a possibility, as we talked about on a few occasions. No real trend in these markets at the moment, but you know, if we can break through the top of these highs and to the top of the 200-day moving average, you know, maybe we're looking at a breakout into a new topside trend after being ranging for a while. Wall Street, the index, I said last week that it's one of the harder ones to read. You can see there's this rising trend line through, if you're connecting the closes rather than these kind of spike lows, which tend to happen out of hours. You can see that's where we bounced off most recently with this kind of tweezer bottom. We've been rallying up since there. The moving averages are more aligned. Well, they're kind of mixed, aren't they? So we've basically got the 20-period moving average, the 20-day moving average is below the 50, but it's above the 200. So you know, hence why the market's quite choppy. There's just no real clear trend, but you can see that actually these lows seem to. This little trend line here, we're probing it at the moment, and it is also where we'd pushed beyond that 50-period moving average on the 4-hour charts, potentially looking at a little push to the top side from here, but look for a reversal too, because that would work as a downtrend and maybe a little drop down again. It's you've got to be open to both sides of the market in Wall Street at the moment, I think, because there's no clear trend. Switching gears to gold now, I think we're on for an opportunity at the moment. It's a bit, you know, it's a bit late in the opportunity, but we saw basically a retest of this high, successfully held it, now broken this little trend line to the downside. Haven't had a close yet on this particular candle, but we're quite well below those lows, and in keeping with this downtrend in gold that we've been in for a while. Just have to be aware that we're getting closer to, maybe on a daily chart I can show it better, you know, the bottom of this sideways range that's been so well defined for a while is down there at 1308. 1308, and then if we're really testing it, down at 1304, which is also the 200-day moving average. So 304 to 308 should be good support for gold. Can look for some signs of a reversal of this downtrend that we're in at the moment, but at the time being, the downtrend looks good. Looks like it's heading down towards potentially, you know, what we had 1311 at the moment, 1313-ish. So potentially, you know, sort of $9-10 to the downside potentially from here if this downtrend is to continue. Which, according to the moving averages, the alignment on this short and the RSI being well below the 50 and respecting the 50, which denotes a downtrend, all shows pretty bearish momentum for the time being. So then, yeah, just to reiterate, once we get down to 1304, potentially 1308, is when we'd look maybe for some downtrend line to reverse to the top side. Last but not least, crude. So, I've drawn it at 74 for some reason. if I change that to 75 is basically the big level that we've been, and actually 74 worked as well, but 75 is where we've obviously stalled just before. 74.50 you could say. So we've been stalling at that level, and we have quite a well-defined base as well, slightly inclined trend line there, or you could just draw it horizontally through maybe this high here. One of these two is quite decent support. The trend is all up, so that support should in theory hold there, but we're almost crossing over the 20 period into the 50, and obviously we've just hit that, we've almost hit that big 75 level, so you can see why that might be cause for a top and a little short-term pullback. On this daily chart, we have had this particular trend breakdown. We haven't had a close through it yet, but that's what we're looking at potentially today. So some little bit of evidence of weakness coming through here in crude after having hit that 74.50, almost 75. Like I said, trend still to the top side, but potentially that big longer term level is working here. So we've got we've got a trend line break to the downside, which you could take, bearing in mind the overall trend is still up, so it won't necessarily go too far, but maybe look to these old peaks where we recently broke up from, this low down here, potentially targets on the downside if this little trend line break has any weight to it. Yeah, also worth noting on the daily chart that we tipped the 70 overbought level, and we're rolling over from there. There we go. Where are we? Yep, 25 minutes, not bad. I think we'll leave it there, everyone. Thanks very much for attending. That's our Forex indices and commodities roundup for this week. Follow us again on Monday next week. Also this week, quite busy on webinars. We've got a webinar specifically on how to trade when you work a 9-to-5 job, or how to trade part-time, or some suggestions for how you might be able to go about it on Wednesday. And then on Friday, we've got good old non-farm payrolls. We'll be covering that live from here. So that Friday webinar kicks off at 1:15 p.m. BST, London time. And the Wednesday webinar is at 12:30 BST as well. All right, thanks everyone. Thanks for attending. Have a good rest of the week. Jasper signing out.